Imagine a business that doesn't build factories, doesn't ship physical products, and doesn't manage complex global supply chains. Yet it dictates the flow of billions of dollars across the entire economy. This is CRISIL. It is the invisible toll booth of India's capital markets. For nearly 4 decades, this quiet giant has stood at the crossroads of finance, acting as an elite gatekeeper. If a major corporation wants to borrow money, they must pay a toll to CRISIL. In this deep dive, we are going to crack open the business model of India's premier rating agency, explore its incredible relationship with global giant S&P, and analyze how it built one of the most durable economic moats in financial history. Let's decode how they turned trust into a compounding money machine. To understand why CRISIL is so incredibly profitable, we first have to understand the mathematics of a credit rating. When a company wants to raise money by issuing bonds, they are competing for investors' trust. Without an objective, trusted stamp of approval, investors will demand a massive credit risk premium, essentially a very high interest rate to offset the uncertainty. But when CRISIL steps in and assigns a premium AAA rating, that uncertainty evaporates. This rating compresses the credit risk premium by up to 200 basis points, which is a financial way of saying 2 full percentage points of interest. For a company issuing 1,000 crore rupees of debt, a yield drop of just 150 basis points translates to 15 crore rupees in annual interest savings. The rating fee CRISIL charges is a tiny, microscopic fraction of these millions in savings. Therefore, corporate borrowers don't just pay CRISIL's toll, they pay it gladly because the return on investment is immediate and massive. While credit ratings are the company's emotional anchor and most famous product, CRISIL is actually a highly diversified knowledge conglomerate built on 3 core pillars. The first, of course, is credit ratings. This is the domestic core, where CRISIL commands over 40% of India's corporate debt rating volume, serving as an essential utility for companies raising bank loans or issuing commercial paper. The second pillar is deep research. This division acts as an intellectual powerhouse, churning out macroeconomic analysis, industry risk metrics, and customized intelligence for major domestic and global institutions. The third pillar, and the one that surprises most investors, is global analytics. This is CRISIL's international engine, providing complex risk modeling, quantitative validation, and compliance tracking directly to the world's largest financial entities. Together, these 3 pillars ensure that CRISIL is not just a rating agency, but a global data powerhouse. A major turning point in CRISIL's history occurred when the global financial giant Standard & Poor's, now S&P Global, began buying into the company, eventually securing a commanding 67% majority stake. This parentage is not just a corporate footnote, it is a multi-layered barrier to entry for any competitor. By being deeply integrated with S&P, CRISIL gets immediate access to gold standard, world-class analytical methodologies. Furthermore, it serves as the global analytical back office for S&P's worldwide operations. When a multinational corporation enters India, they naturally look for a name they trust globally. CRISIL, backed by the prestige of S&P, is the default choice. This strategic synergy effectively locks out smaller domestic rating firms who lack this massive global network, and it has fueled CRISIL's aggressive expansion. Let's look at the hard numbers, because CRISIL's audited financial statements read like a textbook study in compounding. Over the last few years, the company has shown consistent, steady scaling. In the financial year 2025, consolidated revenue climbed to over 3,600 crore rupees, while profit after tax grew in tandem to 766 crore rupees. But the real magic here is the concept of operating leverage. Because rating and analytics are intellectual, asset-light businesses, CRISIL doesn't need to build new physical infrastructure to grow. Once their fixed staff and technology costs are covered, almost every single rupee of incremental revenue flows straight to the bottom line as pure profit. This dynamic makes CRISIL an incredibly efficient compounding machine. This highly efficient operating model results in some of the most elite return metrics you will ever see on a balance sheet. CRISIL consistently generates a return on equity between 30 and 40%, and a return on capital employed between 35 and 48%. Because the business requires almost zero capital expenditure to maintain itself, only basic tech upgrades and office space, the company operates with zero long-term bank debt. So what do they do with all this excess cash? They give it back to the owners. CRISIL operates an incredibly generous capital allocation policy, paying out 60 to 80% of its net profits as dividends. In fiscal year 2025 alone, they distributed a massive 61 rupees per share to their shareholders. It is a compounding profit machine that handsomely rewards you for just holding the stock. But all of these outstanding financial metrics rest on a single fragile foundation: absolute trust. As CRISIL's founder and first managing director, Pradeep Shah, once famously noted, "We refuse to upgrade our first client's rating despite intense pressure. Integrity is the only asset a rating agency truly owns. If compromised once, it is lost forever." Back in the late 80s, when CRISIL rated its very first client, the state-owned IPCL, the management tried to pressure them for a higher rating. By standing firm and refusing to yield, Shah established a legendary culture of analytical independence. He realized that the moment a rating agency sells its grade for short-term fees, its long-term economic value drops to zero. That culture of absolute integrity is what built CRISIL's premium reputation over the decades. However, that reputation is constantly tested by systemic financial crises. The ultimate test for Indian credit markets came in 2018 with the catastrophic collapse of the infrastructure giant ILFS. Competing rating agencies had maintained pristine AAA ratings on ILFS right up until the day it defaulted, triggering an aggressive regulatory crackdown by SEBI. Interestingly, CRISIL emerged from this storm largely unscathed, having prudently avoided rating ILFS's core troubled entities and flagging subsidiary cash flow distress early. In the aftermath, SEBI forced all agencies to publish strict probability of default matrices. While many thought this heavy regulation would hurt the industry, it actually did the opposite. It widened CRISIL's moat, as risk-averse investors fled smaller, less reputable rating agencies and consolidated their trust in the undisputed gold standard. To keep compounding outside of domestic boundaries, CRISIL has executed a brilliant global acquisition playbook. Rather than trying to build global financial databases from scratch, they bought their way into elite international markets. They acquired McKinsey's price metrics to gain a foothold in wealth management analytics. They bought Coalition Greenwich, giving them access to proprietary, highly prized benchmarking data used by the world's largest commercial and investment banks. And years earlier, they bought IRENA, which pioneered high-end offshore equity research. These acquisitions transformed CRISIL from a domestic rater to an essential global analytics engine, embedding their quantitative researchers directly into the front offices of Wall Street. When we step back and trace this entire journey, we see a masterclass in corporate evolution. Starting in 1987 as a domestic experiment co-promoted by public institutions, CRISIL quickly realized the power of global alignment, forging a partnership with S&P in 1996. By 2005, S&P took majority control, morphing the company into an international analytics player. And today, we see the culmination of that evolution, a multi-thousand crore data empire that is highly diversified, digitally driven, and structurally indispensable to both Indian debt markets and global financial institutions. So, where does CRISIL go from here? The answer lies in the massive structural transition of global capital towards sustainability. The shift to green technologies requires trillions of dollars in green bonds and sustainable financing, and all of these instruments require strict validation frameworks. CRISIL, true to its innovative roots, was among the very first to receive formal SEBI approval for ESG ratings in India. As sustainability compliance shifts from a voluntary corporate PR exercise to a strict legal mandate, ESG scoring will become a highly profitable, recurring annuity business model. CRISIL is perfectly positioned to capture this new frontier, essentially building a brand new toll booth for the green economy. At the end of the day, CRISIL represents the ultimate dream for long-term compounders, a business that requires no physical factories, has no debt, produces immense cash flows, and operates a virtual monopoly on trust. It is a premium business that has earned its premium valuation. As India's bond markets mature and global risk analytics become more complex, this invisible toll booth will continue to collect its quiet fees. What are your thoughts on CRISIL's durable economic moat? Is it a permanent fixture on your long-term watch list? Let us know in the comments below. Don't forget to like, subscribe, and share this video with fellow business enthusiasts. Thank you for watching, and we will see you in the next episode of Business Decoded.